Hello, what's up? My name is Cody the Coin Raptor, and in this video, we're going to be talking about the Bitcoin monthly report put out by ARK Invest for August 2024. They usually put these videos out about a month after the actual last month. So this is going to be for August, and then when September comes out, I'll talk about the September monthly Bitcoin report. Now, they talk about this being a make or break moment for Bitcoin, and August was definitely a make or break month for Bitcoin. We're going to go through the whole report here, and I'm going to go ahead and give my thoughts and feelings on the matter, and then at the end, I'm going to summarize things. So before we get to that, be sure to subscribe, be sure to hit that like button, and be sure to follow me on X and Threads. So we're going to go ahead and get right into it. First, they start off with a market summary. Now, they start off by saying that the Bitcoin's price decreased to 58K, and it was unable to cross above the 200-day moving average of the short-term holder cost basis. The 200-day moving average, 63,693, and then the short-term holder cost basis about 63K. So this is kind of seen as a bearish sign if it can't push above the 200-day moving average and the short-term holder cost basis. We saw that actually happen in September, so this isn't really as much of an issue now. But this is going to be a level that I'm going to be paying attention to very closely. Right now, currently, Bitcoin is about 62K, so these will continue to be some strong resistance points for us to take a look at. They also say that when you take a look at Bitcoin's rolling yearly high, the percent drawdown in this price in 24 is consistent with Bitcoin's historical corrections and bullish primary trends. And the reason why this is important here is because during bull markets, Bitcoin doesn't just go straight up to the moon. Normally it has pullbacks, and these pullbacks tend to be about 30% or so. And this is something we're going to talk about a little more. They have a chart that I'm going to show you. And so what happened in August is actually pretty normal for Bitcoin. And they also talk about the MRV Z-score. This is something I've talked about previously to indicate the fact that Bitcoin is undervalued right now. The market value to the realized value Z-score. I'm going to talk about that in a minute. Now, part of the key takeaways here, Bitcoin remains in a structural bull market. And this is easily borne out by the fact that we just hit a new all-time high this year. If we weren't in a bull market, we wouldn't be hitting new all-time highs. It's really that simple. And now they also talk about the employment data and inflation. We're going to get to that, and the economic indicators towards the end of the report here. So we go through the Bitcoin metrics. These have mostly been downgraded to neutral. Mining difficulty, miners' revenue is down. Transaction volume is now bearish. Long-term holder supply is bullish, though. This is very interesting. This is actually pretty key, especially considering the fact that long-term holders are going to continue to buy and hold and not sell. That's important. But those are the main differences. Now you go here to the next sheet of Bitcoin metrics. The only thing that's really been touched is the short-term holder cost basis. That got downgraded to neutral. Otherwise, you have a mix of bullishes and neutral positions. So first thing I want to talk about here is that 200-day moving average, or the cost basis of the short-term holders during August. Now, again, as a reminder here, those levels are going to be at about 63K. So we've actually pushed above those levels in September, albeit briefly before coming back down again. So these are important levels to pay attention to. Now, on the other side, when you take a look at supports, the supports that they commonly sign here are going to be the on-chain mean at 52K and 46,000. All right, so those are going to be the areas in which I would expect I would call that as ultimate support. These are levels that I don't think, frankly, are going to be broken. I don't think we're going to see a move below 52K or 46K in the immediate future, considering the fact that those are so important. Those on-chain mean supports are so important to the overall structure of the bull market. And we are still in a solid bull market. All right, so if you applied this whole idea here to what we've seen in the past month, then this would actually be bullish, considering we moved above those levels that we talked about at about 63K. Now, next, they talk about the average drawdown for Bitcoin. As I said before, the drawdown Bitcoin doesn't normally just go straight up. It has actually a large drawdown. You see here that they call this the 30% drawdown line, this dotted line here. And you can see that Bitcoin normally does go and have a drawdown during the bull markets. Now, they still say that the correction associated historically with Bitcoin's primary bullish trends, like 2016, they measure all this together. Corrections from yearly highs of 30% or greater are basically are normal in Bitcoin's market. And they said that 30% or greater would take it down to 51K, which we actually did see Bitcoin go to a little bit in August. So this is honestly pretty normal. Now, a lot of people look at this and they say, okay, a 30% drawdown, that's pretty extreme. I don't think we're in a bull market, but this is very normal for Bitcoin and the incredible liquidity and the volatility that normally is associated with a Bitcoin bull market. Now, the other thing they talk about is the Bitcoin ETF investors. They calculated the Bitcoin ETF cost basis, and this is sitting at probably about, I call that at a little over 60K. And they're saying that as long as the price is below 60K, that means basically that these spot investors are going to be underwater. They're going to be losing money. And again, Bitcoin's sitting at about 62K right now, so they're at just about break even currently. So that's something to pay attention to, something to watch out for. And the other thing that is a really important note is the fact that even as Bitcoin's price comes down, you tend to see an increase in the number of people buying Bitcoin. So people are actually buying the dip here, and I think that's really important to point out. All right, the MVRV score. So them MV, market value, RV, realized value. Now, taking these two things together and comparing them and then dividing them, you have what they call the Z score. And the Z score, as I talked about in my last video, is a fantastic indicator of whether or not Bitcoin's overvalued or undervalued. So normally during a bull market, you tend to see Bitcoin above 8. And it tends to peak above 8. In this case, for 2018, it actually, or 2017, it went up to about 11 or so. 2021, it went all the way up to around 7. And currently, we are sitting below 2. So they say at the close of August, the Z-score was 1.6 relative to its mean at 1.42. So anytime it's around 1.42, that's typically where it tends to hover. Now, the mean serves as a demarcation point between the bull market and an impending bear market. When it drops below that 1.42 level, that would be a cause for concern for the bull market. However, I would also interpret that as a time that would be a good time to buy as it gets cheaper and cheaper and cheaper and becomes undervalued compared to where it's been in the past. All right, short-term liquidations relative to long-term liquidations reached a low not seen since the second quarter of 2023. Now, what's going on here is they've gotten taking the futures, the short and the long-term liquidations, and comparing them together. They calculated the short to long liquidation dominance by dividing the sum of short liquidations over the last 90 days by the sum of short and long liquidations over the same period. Basically, what they're trying to determine here is which way the market's facing. And they said that shorts are only making up 37% of total liquidations, which is consistent with local market bottoms. So these shorts get liquidated, and at some point, all the shorts are taken out, and then now you tend to have instead of having so many shorts, you have more longs, and that's actually more bullish in ARK's view. So this is consistent with the local market bottoms. And again, looking at August, that would actually be pretty accurate to say that August was the local market bottom. We saw Bitcoin go down to 50K and then bounce and come back up again. So this is a good sign. All right. Now they talk about the economic indicators, the dollar index, and the fact that it's been weakening and weakening and weakening. And I've said before multiple times, the dollar index, it's going to be measuring the dollar against a basket of currencies. It's really important to understand the fact that the dollar index and Bitcoin tend to move inversely. So as the dollar index goes up, Bitcoin tends to go down. Because in a market, an economy, when you have a weakening dollar and a dollar that's getting devalued, you tend to look for an alternate resource, something like Bitcoin or gold, to put your money in to save your spending power. So now, as the dollar gets weaker and weaker and weaker, that means that Bitcoin is going to get stronger, and it's going to be more attractive to investors. So they're saying here that the dollar is weakening, and this is based off of the dovish Federal Reserve. The Fed was cutting. Okay, so this is actually, I think, bullish in my opinion. ARK says it's neutral, but I would actually say this is fairly bullish. Now, they also talk about the employment data. So they specifically talk about the preliminary employment revisions every year, and the fact that actually the employment data, based on this revision for the year up to this point, actually got revised down by about 800,000 jobs. So this is partially a cause for concern, but based on the other market reports that I've seen, jobs reports, the economy right now is still pretty decent, and there hasn't been a spike in unemployment. So I really don't think that this is as much of an issue. But ARK is basically saying that this is bearish, and this is something that could potentially lead to a recession in the near future. They also talk about the inflation rate falling below 3%. Now, the CPI, the Consumer Price Index, as reported, actually went down below 3% to 2.9% for the first time since March 2021. And this should be seen as a sign that inflation is coming down. And as a result, that should be very bullish for Bitcoin, because now the Fed can cut. And when the Fed cuts, Bitcoin becomes more attractive. Risk-on assets become a lot more attractive. And they also talk about the leading economic indicators, and the fact that leading economic indicators are at a lower level than COVID, when the economy was shut down. And they kind of expect that this is going to continue to go lower and lower and lower. We'll have to see with this, but ARK is viewing this as bearish. All right, so that's the whole report. I want to go ahead and go through just a quick summary here. So my takeaway from this is that ARK is still looking very bearishly at the economy, and I really don't think the economy is as bad as they're making it out to be. There's a lot of noise. There's a lot of things, a lot of indicators that say things are great, and there's a lot of indicators that say things are poor, right? But so far, what we've seen, things like GDP and also the jobs reports that have come out, and unemployment, those are things that I would pay attention to. ARK is expecting, because of these indicators, that we're probably going to go into a recession in the near term. Now, I don't think that's going to be the case personally. And they've talked about the fact that the Bitcoin, it being unable to cross above 63K, that was bearish. But now that we've actually pushed above that 63K level and come back down again, I actually think that this is fairly bullish for Bitcoin. Now, they also say things like, well, the corrections are normal. I would agree with that for bull markets. The Z-score is actually looking very good for Bitcoin. So, again, there's a lot of bullish things to like in this report. I just think that they're kind of a little bit offsides when it comes to the economy and the way they've been looking at this, because they've been very, very bearish on the economy over the last year, and I think that hasn't really borne out. The economy has remained actually fairly resilient, which is what you need to have in a Bitcoin bull market, a resilient economy. If you get a recession, that's going to affect Bitcoin, and Bitcoin's going to be negatively impacted by any sort of recession. But let me know what you guys think. Leave a comment below, and I'll catch you guys in the next video.